Hi, I'm Cary Artac, founder and chief analyst of ARTACADVISORY. I'm recording this video in late July 2015 when recently the gold market's been getting a fair amount of attention as it continues on its longer-term technical downward course. I'm here today to update you on my latest thinking and to provide mid to longer-term technical targets for the precious metal. Longer-term subscribers to my monthly ETF snapshot know that I've essentially been bearish the gold market since the end of February 2013, when both the GLD, that is the Active Spider Gold Shares ETF, and Comex Gold futures violated an ascending channel formation that defined the preceding 5-year rally. This technical event signaled an end to the longer-term bull market, and because that bull market became increasingly vertical as it moved to new heights, it then had the capacity to give back most, if not all, of the preceding 5-year gains. This church steeple rally is reminiscent of the NASDAQ rally in the later 1990s, where once the bubble pops, the market in question is highly susceptible to cascading back down at an angle symmetrical to the preceding rally. While the gold market has not been so symmetrical on the way down, it is nevertheless currently weighted by a variety of fundamental circumstances that do not bode well for higher price activity. A recently stabilized euro currency following the Greek bailout, an Iran deal that reduces the chances for war and higher oil prices, and probably the most significant of all would be a continued rising gold-denominated US dollar, which I happen to address in 2 recent videos uploaded in May and followed up again in July 2015. My longer-term 12 to 18-month downside target for Comex Gold remains in the 875 to 913.5 region, which I'll illustrate later in this video. However, there nevertheless remains respectable intermediate support just below current price levels in both markets, able to contain quarterly selling pressures. Whether viewing the GLD or the Comex futures, a slightly descending congestive dynamic has played out since the 2013 low, characterized by a series of rotational highs and lows that are slightly lower than its predecessor. A couple of intermediate descending channel bottoms form price support ranges in both the GLD and Comex Gold that are capable of containing monthly, if not quarterly, selling pressures when tested, possibly eliciting what over the last 2 years has become a common 3 to 5 month rally. For the month of July, this price support range is found in the GLD between 98.93 and 102.06, dropping to 98.30 to 101.43 in August, and to 97.67 to 100.80 in September. In Comex Gold, similar intermediate price support is found at 1052.9 to 85.3, dropping in August to 1047.9 to 80.3, and in September to 1042.9 to 75.2. Holding above these formations allows recovery over the next 3 to 5 months into the 128 region for the GLD and into the 1332 area for Comex Gold. But I'm not counting on that recovery given my longer-term negative outlook, with an end-of-month settlement below these intermediate price support levels not to come as a great surprise. Bearish momentum then likely to accelerate into later year, Comex Gold then expected to reach the 875 to 913.5 target region within 5 to 8 months. Now you'll likely notice I keep mentioning Comex Gold long-term price support without mentioning the GLD, and that's because longer-term Comex Gold price support is based on over 35 years of historic price activity, which is impossible for the GLD given its 2004 origins. However, we can roughly ascertain long-term support in the GLD by using Comex Gold as our reference market. This monthly Comex Gold chart spans back to the later 1970s and clearly shows the infamous January 1980 spike high at 875 even, the 252.5 low placed almost 20 years later in August of 99, and the 1920.7 all-time high placed more recently in September 2011. The 913.5 support level is a 1 5/8 Fibonacci wave count using the 1980 high, 99 low, and 2011 high. The 889.8 support level is simply a 5/8 or 62% Fibonacci retracement from the 2011 high back to the 99 low. This region hovers just above the 1980 875 high. The equivalent support region in the GLD would currently be 83.15 to 87 point even, forming a range of ultra long-term support in both markets able to contain selling into the next decade. For continued nuancing of mid to longer term SPDR Gold Shares ETF market analysis, you can check out my monthly ETF snapshot, for which I offer a 2-week no obligation free trial. Until then, stay tuned for continued follow-up videos, expecting my next gold video in September for updating of these key price support levels into later year. I'm Cary Artac, and thank you for watching.